Hey, what's up, everybody? Let's talk about what all happened in the news today. We'll look at some data together. We'll talk about the latest news on tariffs. We'll also check out stocks and see what everybody's going to be watching as we go into next week. Hope you love this video. I got a good little streak going, so you're always welcome back and we could learn and stay updated together. Hope you enjoy. So first, we got consumer sentiment data today. Consumer sentiment data for April 22nd and May 13 came out. University of Michigan said its preliminary index of consumer sentiment for May came in lower than expected. So we expected 53.5. It came in at 50.8. So a little bit lower than expected. That's down about 3% from April's read of 52.2. American households felt worse about the economy in May than they did in April. And 3/4 of consumers mentioned that tariffs were the main cause for them feeling the way they felt about the economy. This reading that we got is the second lowest on record, only behind that of June of 2022. That reading back in June of 2022 was 50 and think about what all was happening during this time. We had inflation troubles. The Fed was fighting inflation and they brought out their tool of monetary policy to raise interest rates. So we had rising interest rates and this caused fears of inflation, of recession. Now, this reading we got for April through May, dropped for the 5th straight month and is down about 30% from December. Respondents expect prices to surge 7.3% over the next year, which is up from April's expected rate of 6.5%. And this is the highest reading since 1981. Longer term inflation expectations are also seen to be higher. And conveniently, that's right around the time where Walmart announces that they'll be raising prices this month and going into summer due to tariffs. In the past 5 years, there's been little correlation between how Americans feel about the economy and how they shop. So consumer demand has been resilient and the economy's been doing really well. And this makes me think of why could this be the case? Because a lot of people think it's bad. But this is right after 2020's pandemic, where interest rates were dropped to stimulate the economy. So we got all this stimulus. People threw it in their savings accounts, paid off debt, assets. So a few different things happened. People got out of debt. They're saving a little bit of money if they were able to. And then a lot of people were buying assets like stocks, Bitcoin, real estate, and those assets performed really well. So this caused a wealth effect. So even though things have been a little tough in the economy, people's had reason to keep on spending because they still feel good about where they're at financially. But they're getting to the point to where they're losing the will to spend it. And the reason why is we still got high prices, rates are still high, and the new kid on the block is tariffs now. And this is diminishing consumer spending and business investment. The next thing we got was some real estate data. So we got housing starts, and housing starts is pretty much think about construction of new property, new housing being built. And this is how many projects were started. Usually spring is when the market starts heating up as we head into summer, right after the slowdown in Q4 where all the holidays and snow and the market really freezes up. And then as we go into summer, it starts thawing out. But this spring was unusual because for the 3rd year in a row, the housing market's been pretty flat. It rose 1.6% in March to a seasonally adjusted annual rate of 1.36 mil in April. And the rise of 1.6% was a smaller than expected rise because we expected 5.2%. So that's quite the drop. The increase was led by multifamily construction. Single family sagged 2.1% to the lowest level since July, and housing starts were down 25% since they hit an annual rate of 1.83 million, which was an 18-year high 3 years ago. We also seen permits, so we also got housing permits data, and think about housing starts as projects that started, and permits are plans to start, like they're trying to get everything ready. You know, you got to go to the city and get all your permits in order to start. Permits fell almost 5% in April to an 1.41 million annual rate, and that's down 26% from post-pandemic peak in early 2022. This news follows low confidence in industry by the National Association of Home Builders on Thursday, which dropped to its lowest level since late 2022. There's always the highest level and the lowest level. It seems like there's always something like that. They highlighted that rates, policy uncertainty, and material costs are what's hurting sentiment, and builders expect as negotiations and progress on tax policy improve that this will help stimulate and stabilize the economy, and that the outlook is good and that they see strengthening housing demand in the future. We also got some more news on tariffs. So just a quick search around. I've seen this stat and I thought this was interesting. 91% of S&P 500 companies have talked about tariffs in their first quarter earnings calls. That's the highest in 10 years. See another data set right there. With the 90-day pause on tariffs, on these tariffs, especially with China, attention moves to the budget, tax reconciliation, and deregulation. But it seems like there's always something. If it's not this, it's that kind of thing. Now, Trump says that the U.S. will set tariff rates in coming weeks as they can't meet all 150 companies that are trying to make a deal. They'll be sending letters out to them to let them know what their tariff rates will be. So that's interesting. They're saying that there's 150 countries all trying to settle and come up with deals for their tariff rates, and like Trump's like, oh, we got so many people, we can't sit down and talk to all of them. So they're gonna take a couple weeks and see what happens and let them know where we're at. Now, the next thing we're going to talk about is this huge credit downgrade for the US. So Moody's, which is a credit rating firm, downgraded US debt from AAA, which is top tier, top of the top, the highest you can be, to AA, down one slot. So we're not like terrible, we're still top of the line, but we got downgraded. They cited issues of successive administration failures to deal with rising US debt and deficits. The decision means that all three major rating firms have now downgraded US debt from top ratings. So we got S&P Global was the first to downgrade, and that was more than a decade ago, and then Fitch Ratings back in 2023, and now we got Moody's today. Wow. But there is some good news. They changed their outlook on US credit to stable from negative, citing the economy's strong growth potential, the dollar's dominant status as reserve currency, and an assumption that the country's institutions and governance won't materially weaken, even if they're tested at times. So all of this stuff is interesting, and I wanted to see how stocks performed today. So today the market was mainly flat. Tesla up 2%, NASDAQ 100 up 44 basis points, so less than 0.5%. But after hours, once we got this downgrade, we seen stocks start really selling off. So after hours, the Qs completely erased all of their gains, being down 1.32% in after hours. Tesla down 2.8, Nvidia down 2.44, Microsoft down, Meta down, Amazon down, Apple down, Bitcoin down, and I'd imagine the VIX is up, but that doesn't trade in after hours. So all of this is interesting to watch. Watching forward, we got a busy week next week as well. We got a lot of Fed speakers coming out on Monday. We got John Williams, Philip Jefferson. Then we also got U.S. leading economic indicators. Be on the lookout for that. Tuesday, we got Tom Barkins. We got Susan Collins, Alberto Mussolini, on Adriana Kugler. I don't even know how to say some of their names. But as you can see, just a ton of Fed speakers. They could talk up the market, talk down the market. I'm sure we'll get a lot of information from them and their policy. It's probably still going to support wait and see. Some of them might support cutting. Some of them might still see a resilient economy. It all just weighs itself out. I've come to find out. Thursday's a big one. We got initial jobless claims. Watch that one for sure. We got PMI data coming out. Existing home sales, got John Williams, Jeff Schmid, new home sales, and then Fed Governor Lisa Cook. And then Sunday, May 2025, Jerome Powell commencement address. So all of this will be interesting to watch. And then I wanted to see what companies are reporting earnings. We just talked about some of the real estate data we'll be getting. And then on May 20th, well, we talked about how we got housing starts and then how we got permits and what the National Association of Home Builders said. And then we got those existing home sales and new home sales, right? So on the 20th, we got Home Depot earnings and Toll Brothers earnings. So Toll Brothers is a builder, so we'll get insight into what another builder thinks. Home Depot, think about that as people buying homes, doing renovation projects, stuff kind of like that. On the 21st, we got Lowe's, so that plays into the same play as Home Depot, and also Target. So 3 of those 4 companies give us real estate insight about how their consumers performing, what they expect, how they see the real estate market performing. And then Target gives us insight into that higher end consumer, which Walmart just told us that higher end consumers are now shopping at Walmart. So who knows how Target will look earnings wise, but we'll be watching this. We're looking for insight on the consumer, what they expect prices to look like. Do they expect a lot of inflation due to tariffs or not? And kind of their outlook on the economy just going forward. So that's what we got for this for today, and what we're going to be looking out for next week. It's been a busy week and tons of work for me, and I want to keep on bringing these videos for you and do my best to do that. Hope you enjoy this video, and I hope your week is great. Everybody enjoy.